Hello, it is the 25th of November 2010. Welcome to today's silver analysis and happy Thanksgiving in the United States. And we haven't seen much in the silver market. And I'm only going to presume that Friday will be the same way with the holiday. And this will be a good time to talk about the gold to silver ratio. A few people have been asking about it also, as well as the Dow ratio, which I'll be putting out in sometime in the future. But for now, we got the last 3 months of the gold to silver ratio, seeing it go down from the high 60s and breaking below 50 now on two different occasions. So it's had a pretty decent decline, and yet during this rally, if you were to go long on gold here and sell gold here for a dollar transaction, you would end up having extra fiat dollars. And that's because when gold goes up about $15 an ounce, which is about a little over percent, you may see silver having gains of over a dollar, around 4%. And when that's the case, this ratio goes lower. When you have days where gold goes down about a percent, well, silver will probably go down about 3, and thus the ratio would normally go higher. So within the technical analysis of this chart, it's as Brian Shannon from Alpha Trends has said in these types of charts. If it doesn't scare you out, it's going to wear you out, because this 5-day moving average has been declining pretty much the entire 3 months. The only time that it was rising was a very brief moment in here and this brief moment here, and that has been it. The blue line is the 20-day moving average, and it hasn't even been touched yet. So what that tells us during this decline is that there hasn't been really that much for a retracement. The 10-day has been resistance on several occasions. It has never gotten above it and held above it as of yet during this bear run. Now, I don't know if you can actually trade gold for silver ratio. I'd have no idea. I've seen on SilverSeek that they have a bid and ask price. If you do it, normally what you would do is, if you want to play this to go lower, you would sell your gold for silver. And if you want to play this to go higher, you would sell your silver to buy gold. That would be ways of playing the ratio. But overall, the last 3 months, it's been in a bear market. Now, can it reverse? Well, yeah. Is it going to reverse right now? The odds would certainly not favor that after you've had this retracement come down and had a little bounce to this 5-day moving average. Breaking this level here, we'd have to go to the 9-year chart. And when we see this one here, we can see that it's had a pretty decent size breakdown right below this 5-year moving average, where it had this little, I don't know what pattern you want to call it, but you have a big move. You retrace 2/3. It's almost like a little bit of a bear flag in here, and it's really just been a crashing formation. But right now, there's no such thing as down too much. It can still keep going lower, and maybe we can come down and test this 45, 46 area. In fact, with the way things were looking on the 3-month chart, I would be expecting there to be a good chance that it does at least come back down to this 45. If it comes back higher, then maybe it can come up towards this 60 level. And I myself look at this and I think, well, people talk about gold being in a bubble, and I might want to talk about the same thing, but the gold bubble would have started when gold was roughly around $700 an ounce, which really doesn't make sense, but priced in silver, it might be very difficult for us to even go back and even test this level above 80. My personal feeling is that we can at least test the historic 16 to 1 levels. And if the silver manipulation price is going to create further upside, and both metals just happen to be going higher, gold goes up to 3,000, 4,000, and if they have a 40% up day in gold, then silver may double or triple in one day, and the ratio would keep going lower. Now, as far as these returns that gold and silver has had, this chart shows how well gold and silver has done since they have topped out in 2008, which was gold at 10.29 and silver at 21 and 1/3. And when it was going down, we can see how it was an outperforming level here where gold was going down not as fast as silver was, but since this bottom down towards these areas in here, silver's been catching up to the point where if you would have bought gold at 2008 and silver at 2008, that your investment returns will match equal very soon. And at some point, you would expect the silver one to go above the gold levels. And if we take this from the 2006 highs, where gold was at 730 an ounce and silver was 15 and 2/5, then we can see here when they made this little top how they matched up equal with each other in 2008. That's quite ironic to say the least. And as they were both, say for example in here, I don't have the dates on here, I wasn't able to do that. But at this point in here, silver was back to obviously 1520, and gold was obviously over the 1,000 mark in here. So gold was up about 40+%, and silver was break even. And that was all because of what happened back in 2008 with a 60% decline within the silver market. And just like the other chart, these ones here right now are matching up within the even parity, where if you would have bought gold at 730, silver at 15 on the 2006 top, then you would have the same return on investment. So thank you for watching this, and have yourself a magnificent weekend, everyone. Bye-bye.